The Money Society. The COVID-19 pandemic has had a significant impact on the global economy, and some experts are warning that the situation may worsen in 2023. China is largely being blamed for this potential economic turbulence, as it is currently experiencing the worst COVID-19 outbreak the world has seen. On December 7, Chinese President Xi Jinping abandoned his zero-COVID policy, leading to a surge in cases in the country. The International Monetary Fund, IMF, has warned that the economic slowdown in China, Europe, and the US does not bode well for the global economy, and China's sluggish growth is particularly concerning. Kristalina Georgieva, head of the IMF, stated that China's growth in 2022 is likely to be at or below global growth for the first time in 40 years, which could have significant flow-on effects. There are already signs of China's internal supply chain collapsing, and some experts predict that more than 60% of the population could be infected in the coming weeks. The COVID-19 outbreak in China is thought to be the largest the world has ever seen, with an estimated 248 million people contracting the virus in the first 20 days of December. Leaked minutes from a meeting held by health authorities estimated that nearly 37 million people in China caught COVID-19 in a single day. There have been disturbing reports of bodies lying in hallways at hospitals and morgues, shortages of fever medication and oxygen tanks, and calls for retired medical workers to return to hospitals to help alleviate the pressure. In addition to the COVID-19 outbreak, China is also facing challenges in its property industry. In 2021, real estate giant Evergrande became the world's most indebted real estate company, with debts of around $408 billion. Evergrande's share price plummeted, and the company missed bond payments, leading to concerns about the stability of the Chinese property market and its potential impact on the economy. The combination of the COVID-19 outbreak and issues in the property industry could have major consequences for the global economy. The Reserve Bank of Australia's RBA monetary policy from November, released before China relaxed its COVID rules, warned of the catastrophic consequences if the virus were to get out of control in the country, which has a population of 1.4 billion people. The RBA stated that growth could be particularly weak if China's continued attempts to suppress the virus fail to contain outbreaks quickly, causing a repeat of the economic drag observed during the April-May outbreaks. Even Chinese President Xi Jinping acknowledged the challenges ahead in a New Year's Eve message, stating that, "We have now entered a new phase of COVID response where tough challenges remain." As the world struggles to recover from the economic effects of the pandemic, it is important to closely monitor developments in China and their potential impact on the global economy. Thanks for watching.